dependent upon you. Now, if you're looking for a place to park some fresh cash now, and you want that particular place to be opened to 100, I said triple digits, 100% upside, then I have 3 words for YOU. You need to be actualizing. You need to be buying to open dividend growth positions. Now I have explained to you many times how a portfolio of consistent dividend growers is the best way to clobber the market in the long run and get P.A.I.D. consistently. Now, the best dividend champs do double duty for you. Now, listen to me closely. Once again, the best dividend champs do double duty for you. They fatten your pocket with surging payouts while hitting the gas on research and development spending. You see, that locks in their competitive edge, setting the stage for even higher dividends in the future. It's this kind of vicious cycle that yours truly absolutely loves, and most folks pay far too little attention to, except those that are uber wealthy and the institutional investors. Now, I'm going to give you 5 reasons why now is the time, an absolute perfect time, to look at adding dividend growth stocks to your portfolio, and why I am personally doubling down on these elite companies that I'm about to give to you. And as we move through, I'll also name 3 terrific dividend growth positions, dividend growth companies that will get you P.A.I.D. So let's get going. All right, let's go to work. Let's start with reason number 1. We need to forget about the Fed, because whatever the Fed does, we still have to get P.A.I.D. Now, a dividend hound's worst nightmare, okay? A person that's constantly looking for dividends, a dividend hound, he or she's worst nightmare is that the Federal Reserve will jack rates, making treasuries and other so-called safe investments as attractive as our favorite dividend payers. But you, me, we, the Absolute Wealth Astute family and listeners alike, we can breathe a sigh of relief, because as I have shown you time and time again, dividend growers have beaten the S&P 500 since the Fed started icing the zero interest rate era in the late 2015. Now, what's more, traders betting through the Fed futures market see just one more rate hike coming in the next 12 months. Now, at that rate, okay, at that rate, it'll be a lifetime before treasuries reel in a stock that is paying 4+% and boosting its payout with double digits every year, okay? And I am going to reveal one of those type of positions, and I want you to write down this position when I get down to point number 4. Now, point number 2, earnings as we speak are soaring for many stocks. To get raised dividends, family members and listeners alike, you need larger bottom lines. And that's exactly what we're seeing this earnings season. We're in the midst of earnings season right now, and as I indicated to you, we've got over 1,000 positions we can pick and choose from in the next 48 hours. Now, according to the latest numbers, 73% of companies that have reported so far have topped the streets or analyst forecasts. And that's above the one-year average of 70%. And the profits are on pace for a nice 7.2% rise. Now, there's more to come. And here's what analysts expect in the next 2 quarters and for the full year. Forecasted EPS growth for Q3 of 2017 is forecasted to be 6.4%. Forecast revenue growth is 5.0%. Forecast EPS growth for Q4 2017 is slated to be at 11.7%. Forecast revenue growth is indexed at 5.4%. And for fiscal year 2017, forecast EPS growth is 9.3%, and forecast revenue growth is 5.4%. And of course, larger profits mean what? Increased dividends. Now, the third thing I want to bring to your attention is a jolt to dividend growth. You see, there were some great signs buried in the latest dividend figures from the S&P Dow Jones indices. U.S. companies announced 552 dividend hikes in Q2, 3.6% more than just a year ago. And 72 cut their payouts, and that's down sharply from 158 in Q2 of 2016. S&P 500 dividends are on track to rise 7% in 2017, and that's up from 5.6% last year. And the average S&P 500 dividend hike clocked in at 10.5% in Q2, up from 10.2% in Q1 and 10.4% a year ago. Keep in mind what we discussed earlier, where I was giving you money indexes with regards to the Social Security and investing $200 per month, generating a paltry 8% per year. Now, another spark, the possibility that His Royal Highness Donald Trump and his administration will let U.S. companies bring home their cash that they've squirreled away abroad at a lower tax rate. Now, that would send more greenbacks following to and flowing back into shareholders of companies like Apple, which has the largest overseas hoard of any American firm at $230 billion. Now, that's not the only reason to like Tim Cook's company. It's also a free cash flow machine, with free cash flow clocking in at a massive $53 billion over the last 12 years, okay? And when we say free cash flow, we mean what is left over after growing and maintaining its business, okay, and paying all of its expenses. Now, that dwarfs the stock's dividend, with payouts eating up just 23% of the free cash flow. The payment also yields 1.7% and has soared 66% since Apple started paying the dividend back in 2012. Now, family members, listen to me closely. Apple is a position that will continue to increase its dividend, symbol AAPL, and will get you P.A.I.D. Now, number 4, where dividends go, share prices certainly follow. Now, if there's one thing you can take to the bank when it comes to stocks, it's this. Nothing, I say nothing, can ignite a share price like a big dividend rate increase. Even better, if you can buy into the accelerating hikes as the positions move to the upside, all the better for you. Now, I want to give you a particular company that the uber wealthy have been buying left and right like crazy. And this company is one that very few people know about, but it throws off a ton of cash, and those that know are jumping into it left and right. I bring your attention to a company that is a real estate investment trust. But let me give you a little bit of background, if I may. Write this position down, for it will get you P.A.I.D. And I'm going to give you some numbers that are staggering. Now, if there's one thing you could take to the bank when it comes to stocks, it's this. Once again, nothing can ignite a share price like a big dividend hike. Now, there's a company that has a surging payout that continues to spike and then continues to rise. And that is the payout for self-storage real estate investment trust Cube Smart. Once again, Cube Smart. Simple is C-U-B-E. Now, C-U-B-E is a dividend grower that I simply adore. Since the market bottomed after the chaos of 2008 and 2009, this particular company stock has soared. Listen to this. In the last 8 years, CUBE has boosted its payout, talking about that dividend payout, nearly 1,000%. I said 1,000%. And even though you would have received that, you would not have been sacrificing current yield to get that growth. You see, CUBE also throws off a tidy 4.6% yield. That's wonderful. Now, self-storage REITs have gone on sale due to fears of an oversupply of units, but that's overdone, particularly in CubeSmart's case. You see, the REIT is nicely positioned to cash in as baby boomers downsize and consumers add to their ever-growing pile of stuff. Now, CubeSmart also has 78% of its 832 stores in places with larger than average storage space, a solid counterpoint to overhyped glut fears. Now, CUBE ended the first quarter with a 94.6% occupancy. That's up from 94.4% a year ago. I said 94.6% occupancy. And funds from operations, FFO, is up 8.3%. This company gets more dividend growth sparks from its inevitable payout ratio of 63.5% of trailing 12-month FFO, which is a very, very conservative payout for a real estate investment trust. Family members, CUBE, Club Smart, self-storage REIT to get your P.A.I.D. The fifth thing I want to tell you, pertaining to how to make sure that you're getting P.A.I.D. from particular dividend-paying positions that can pay you handsomely, is your yield must grow fast. Most investors look at current yield when buying dividend growers, and they stop there. That's a big mistake because it's the yield on your initial buy that counts. Listen to me closely and follow me closely. All right? Now, I'm about to give you another position that will get you P.A.I.D. Now, I just gave you one. I'm going to give you two more. Just gave you that CUBE. Now, I want to explain why the yield on your initial buy, when you initial buy to open the position, is vitally important. Here's what I mean. Say you bought shares of a wireless tower operator, American Tower, symbol AMT. Now, this is a stock that I've spoken about many, many times, and this particular position I really, really like because it pays me consistently. It provides cell phone towers for the major cell phone providers, both near and far. Now, one other reason why I love American Tower, symbol AMT, are you sitting down? Giving you all the answers to the test so you can get P.A.I.D. Another reason why I love AMT is because it raises its dividend every quarter, not every year. Did you hear what I said? It raises its dividend every quarter, AMT, not every year. Better take this information and go get P.A.I.D. Now, the funny thing is, you wouldn't know it from the stock's yield because its share price has risen in lockstep with those increases, keeping the payout in a pretty tight range for the last 5 years or so. So let me explain why that's irrelevant, however. If you bought AMT back in 2012, the yield on your original or your initial buy would have already doubled up the stock's current yield to 3.5%. Plus, that rapid payout growth catapulted the stock to an incredible gain of 98% in this particular case. And if you reinvested your payouts, reinvested your dividends, you'd be sitting on a gaudy 116% total return as of today's date, August the 1st, 2017. Family members and listeners alike, there's plenty more dividend and share price growth to come for AMT. AMT's adjusted per share FFO surged 18.8% in Q2, and it sends just 35.8% of its adjusted FFO out the door via dividends. Family members, AMT to get you P.A.I.D. Okay? As I have just showed you, a low current yield can shade massive dividend growth. And that's what really matters if you want to clock big gains and an income stream that clobbers inflation. Now, many people don't realize this shockingly simple truth, but we We do at the ASK THE WIZ Wealth Institute, and we're going to get P.A.I.D from it. We're going to cash in on it. Now, the 3 positions that I have just mentioned are good examples of how you can do just that. I'm talking about that American Tower symbol, AMT. I'm talking about that Cube Smart symbol, CUBE, and I'm talking about that Apple symbol, AAPL, family members. No excuses will be accepted. No excuses will be tolerated. You want to get P.A.I.D, bull, bear, you don't have to care, from dividend paying positions, positions that pay you for simply having the underlying stock, not to mention the implementation of our ASK THE WIZ Wealth Institute dividend option trifecta effect strategy. Well, you've just got some key positions, some excellent positions, if I may say so myself, that will get you P.A.I.D. Don't you dare lay down. No, you get down. You rise up. No matter what comes your way, you control your own destiny. You become the captain of your own fate. You rise up, you kings and queens, you gods and goddesses, and you make Wall Street pay you right here on Main Street. 3 dividend paying positions with 100% upside